What's up, everybody? In this video, I'm going to talk about interest rates and how those interest rates impact your mortgage. How does it impact your monthly payment that you're going to have to pay every single month once you buy that new property? The interest rate has a huge impact on all of that. I'm going to go into some details in this video that are going to help you save some money and help you make a good financial decision on your next property purchase. My name is Stephen Kotobash, and I'm a realtor located in the northern Atlanta area, and I get to help people buy and sell houses every day. What is an interest rate? When you take out a mortgage for your property, the interest rate is the cost to you. It's a cost to borrow the money. What I mean by that is every month when you make that payment, a portion of your payment goes toward principal, and at the very beginning, I will tell you, at the very beginning of the time when you're paying this loan off, you're going to pay very, very little principal every month. And the biggest portion of that monthly payment is going to be interest. And that's the money that you're paying to the bank, essentially, to hold that loan and to have that loan because, hey, a bank essentially paid for your house, right? And you are paying them back. So the interest rate is a very big deal. And when you're looking around at interest rates for your property on that next purchase, be very mindful of the rates that you come across. I will tell you that a quarter of a percentage point on a rate is a big deal. So you might not think, what's the difference between 6.5% versus 6.25%, right? It's a quarter of a point, no big deal, right? Well, you're wrong. If you're borrowing money, especially when you're talking about potentially borrowing hundreds of thousands of dollars, that quarter of a percentage point difference makes a big difference over time, right? So long term, you're going to pay a lot more money in interest. So keep that in mind when you're looking around at interest rates. I'm going to show you a couple of examples. So I'm going to outline it for us on the whiteboard so you can see how that interest rate impacts your monthly payment. Hey, before we move on, do me a favor, hit the like button and hit the subscribe button. It'll help me out a lot. Thanks. So let's take a look at this crazy phenomena of interest rate and how it impacts your monthly payment. Say, for example, you're purchasing a $500,000 house. You're going to put $100,000 down. So you are going to borrow $400,000. So you're borrowing $400,000 and your interest rate is 6.5%. So what does that monthly payment look like? So if you borrow $400,000, you're going to pay $2,528 per month. Now this is principal and interest only, so keep in mind it does not take into account taxes and insurance. You will have property taxes and you will have homeowners insurance that you're going to put into escrow every month. So the actual payment will be a little bit higher, but just for demonstration purposes here, we're going to take a look at principal and interest only. So now we're going to look at that monthly payment. If your interest rate was 6.25%, so you're 6.5 over here, so let's say you could save a quarter of a percentage rate, or a quarter of a point, I should say. How does that impact your monthly payment? So you're still going to borrow $400,000, but now your monthly payment is going to drop to $2,463. So now you're paying $2,463 a month versus $2,528 per month. Big difference, right? But some of you might say, that's really not that big of a difference, but check it out. It's $65 per month that you're saving. And then if you stretch it out to a year, so multiply that times 12, then that's $780 savings for the entire year. $780 is a nice savings, right? That's almost $1,000 in interest that you're saving per year. And that's something you could that's money you could save. You could use it to go toward a nice vacation somewhere, just in saving this quarter of a point off of your interest rate. So that is how the interest rate can really impact your monthly budget. Okay, I'm going to give you another example, and we'll talk about how your monthly payment can be impacted. So let's keep this same example over here where the interest rate 6.5%. We borrowed $400,000. Our monthly payment was $25-28 per month. Well, what happens if we had another $25,000 we could put down? So we're not going to borrow as much. So in this example over here, we're going to keep the interest rate consistent, so still 6.5%, but now we're only going to borrow $375,000. At that same 6.5% interest rate, our monthly payment is $2370. If you do the math here, you'll see that you save yourself $158 per month because you've put down an extra $25,000. I hope you see in this illustration how if you put down a little more money, then you're going to save a little bit each month off your monthly payment. And once again, this one in this scenario, it's $158 for the month, and you extrapolate that out 12 months for the year, and let's say you hold on to the loan for 10 years, then you're talking about some big savings for yourself. I know this felt like a little bit of a math lesson, right? But as a realtor, when I'm working with my clients, I want to make sure that I give them all the information possible so that they can make a fiscally responsible decision for themselves. I want them to make sure they come away at the end of the transaction within budget and that they have a monthly payment that they're comfortable with so they can afford every month. I appreciate you tuning in, and I'll catch you guys on the next video. Peace.